This all comes back to the CPI print that came out a couple of weeks ago. What is remarkable is that they jumped so much at a CPI print. If we take the counterfactual and imagine if it had printed at 2.5, or 3.5 on the high side, would they have jacked up rates 2 weeks later? I don't think they would have. Right? And then furthermore, the statement of monetary policy said they're going to do another one. Right? It is interesting that there doesn't seem to be much consistency. We had a very good employment. Employment's running still quite well. Terms of trade, iron ore is well up off its lows. It's not clear to me why there's such an emergency. So depending which way you want to look at it, this is quite bad for Australia, which is, what does the RBA know that we don't know? I don't think there's much out there. But my biggest personal concern here is that they're stoking the fires of a massive asset price bubble. I think it was Alan Greenspan who said back in the mid-2000s that he can't fight bubbles, all he can do is deal with the clean-up later. Unfortunately, here it would appear the RBA is intent on blowing a bubble even harder. They mentioned in their statement of monetary policy that asset price growth had slowed down in housing prices, or perhaps they haven't checked the data too recently. It's really accelerated back to 10% year on year. Wage growth is one. And at the same time, the supply side is increasing. If that's not the setup for a bubble and a collapse on the other side, I don't know what is. So I personally think the RBA is going to find itself in an even worse situation. So if you want my outlook there that we're toying with here is Australia has to go QE in a couple of years.